US and Iran start exchanging missiles and gold falls to a 6-month low. Wait, what? How does that happen? Isn't gold supposed to be the ultimate safe haven? In fact, that's what everyone believes. Most people also believe jewelers decide the gold price. Wrong. Others think government decides the gold price. Wrong again. So is gold a safe haven or not? Partially yes, absolutely no. How then do you decide to buy gold today or postpone the purchase to next month? Stay with me till the end and you will have a clear framework to understand why gold prices move and indicators you must track, so that next time you walk past that gold showroom, you will already know the math. June 10, 2026, gold prices fall 3%, the lowest price since late March. Barely 48 hours later, gold prices start gaining. So what changed? Read this headline on your screen carefully. Gold prices were not rising without reason. Prices started increasing as the US president cancelled the plan to hit Iran again. And the jump in prices became bigger as Trump hinted at signing Iran deal. So what's the message here? The data debunks conventional wisdom that gold always rises during times of crises. Yes, gold is a store of value, but it is not immune to news headlines. But the most important takeaway and lesson 1 of our framework is the link between gold and inflation. Investors were nervous after Trump's threat to Iran. Why? Because if Trump attacked Iran again, that would have further squeezed the global oil supply. And you probably guessed it by now, less oil supply means higher prices. And higher oil prices mean higher inflation. And I'm not talking of inflation in India or China or even Brazil. Inflation particularly in the United States. Why? Because when inflation in the US rises, the Federal Reserve, America's central bank, just like India's RBI, is more likely to increase interest rates or keep them higher for longer. And when interest rates increase, investors favor US government bonds. Why hold gold which sits in a locker when US bonds give annual returns? In Indian context, it's like locking in an FD when rates rise instead of buying gold. So make it a habit to keep an eye on inflation in the US. And if you want, you can also track US jobless claims report, which comes every week. It's simple. If more people become jobless in the US, the pressure is on Fed to cut interest rates. If the US economy stays strong and unemployment does not rise, Fed is unlikely to cut interest rates, which puts pressure on gold prices. This one is a quick lesson. Gold and dollar largely move in opposite directions. If US dollar becomes strong in comparison with other currencies, gold prices tend to go down. If US dollar becomes cheaper, demand for gold decreases and gold prices eventually go up. It must be clear by now that your neighborhood jeweler or the central government do not decide gold prices. What happens in the US economy plays a huge role on gold prices internationally. So keep an eye out on US dollar index. A stronger dollar hurts Indian rupee and keeps gold prices under pressure. You will remember gold prices crashed in double digits in March 2026. See this headline on your screen. Gold sees worst fall in 40 years. Yes, it was just weeks after US and Iran went to war. Oil shock was coming to the fore. But there was a third factor that nobody saw in March. Central banks were net sellers in March, largely because of Russia and Turkey. Now, latest report from World Gold Council says that central banks became net buyers of gold in April. So this is the third indicator you must closely track. You don't need to be an economist to understand how gold prices move. Gold has its place both in investment and jewelry. If you plan your gold purchases and track these three indicators, inflation in the US, US dollar index, central banks buying gold, gold prices will stop feeling like a mystery and you'll start recognizing the pattern. One last thing, jewelers do not dictate gold prices but always check their making charges. Even gold bars and gold coins have making charges. And Indian government also does not shape gold prices, but import duty changes on gold increase or decrease prices for Indian consumers. Next time you walk past that gold showroom, you will already know whether to walk in or walk on. Until next time.